folks, Dan Freer here, the Mortgage Update, and it is March 3rd, 2020. So what happened today? Those that follow my channel, you're going to see this number and say, holy moly, that's phenomenal. It's a great number, love it, but we've had such a pullback in mortgage rates. Like I told you, our rates didn't even change today. Didn't change. This would usually cause probably at least a 0.25% reduction in rates. Rates are so low that the banks need margin. They can't do loans at zero. So basically rates, I mean, they might have went down like 0.05 in a tick. So that's about it. So you're going to, again, you're going to see the euphoria in the markets are all over the news. Your rates are at an all-time low. Again, if the stock market all-time high is 25,000, and the next day it hits 25,001, it's still an all-time high, another one. So don't be all, if we locked you in, which I locked most of my clients in the last couple of days, there's, again, pigs get fat, hogs get slaughtered. I hate to keep saying that, but I'm going to say it and say it and say it. I said it in the stock market, and what happened there? I had a joke about 2-3 months ago, and I said, every time Trump does something, the whole world economy, especially our economy, it goes like this based on what he says. I said, if he sneezes, the stock market could plummet. I didn't mean that literally, but literally it came true. The coronavirus is the sneeze that made is causing the whole world to collapse at this point. So some good news that came out is the Federal Reserve came out in an emergency meeting and cut the federal funds rate by 50 basis points, so 0.5%. In the latter part of this video, I'm going to explain to you what that is and what it affects. You're going to be surprised on the things it affects and the things it doesn't affect, okay? So let's recap what happened today. And I'm going to start going through these timelines with you so you can see what I'm seeing throughout the day. I have a little bit more in-depth charts than this that I dissect as the day goes on. And usually we don't have this much movement in the market. What happened, I think yesterday, stock market was up 1,200. Today it's down 700. Those aren't normal. And these aren't normal days either. Okay? So let's go through what happened at the day. The market opened up and the Dow was down 25. Really nothing here major. MBS's, and for those newbies at the end, I'll explain to you what this number is and why we watch it. Very important number in the mortgage business for realtors, mortgage advisors, and if you're looking for a mortgage, how this affects you. So it was basically a lackluster day. I got a news up, and then all of a sudden you start rumblings through the market that the Fed might cut rates 50 basis points. Well, what's happening is they're coming out with news saying all the world is the G7, that's the biggest countries out there, are trying to make a cohesive agreement to say, if this coronavirus plays this much havoc on the countries or all of the world, we need to step in and do something. So what happened is the Fed just did that. They came in, they did something. The problem is a rate cut in the federal funds rate, and again, I'm going to go over what the federal funds rate is in a minute, but it's okay. Let's say you have lower rates on your credit card. Does that mean you're going to go out to dinner? Does that mean you're going to travel all over the world? You're going to travel to China. You're going to travel to Italy. You're going to travel. No. Does it mean you're going to go out to big areas to concerts and ball games and this? It's going to probably really condense what people do. They might be reluctant to go out to dinner. We even have the church today come in and say, we're not even going to have people handshake anymore, and a bunch of things that are rituals throughout the churches. They're saying we're not even going to do that. So people aren't even going to go to church to avoid this plague. So what's that going to do to the economy? People buying. Our economy is based on consumption. China is based on production. So if they're not producing and we don't want to buy, I mean, that's a lose, lose, lose. So it doesn't matter, if credit is low or not, or the rates, people are going to be reluctant to spend money and go out and do things. So the rate cut, in my opinion, isn't going to do anything. And it's not only me, Let's see what happened with the stock market. So throughout the day, the rumors went to a meeting, they confirmed it. They came in, our government, not our government, take that back. The Federal Reserve is not a part of the government. It's a private agency. Some of you might have learned something there. They came out and actually said, we are going to cut rates 50 basis points. All of a sudden, within an hour, boom, the stock market starts plummeting. MBS prices go up a little bit. Then you have more collapse, and then the MBS is spiked. Okay, a lot of people were pouring their money into these bonds, but the lenders, the banks, the mortgage companies are saying, you know what, our rates are low enough. That's as far as we're going to go. We need margins. These things, when this thing fixes in 6 months or a year, I don't think it's going to take that long. It might. For it to flush through the whole world economy, a year or 2 or 3 years down the road, when you look back and say, I got a 30-year mortgage at 3.25%. It's like, really? So you could see 10 years from now, if the rates are 6, 7, 8, 10%, you're going to look back and say, man, this was a phenomenal opportunity. I got a ton of emails today. Thanks to everybody. I forgot to mention this yesterday. And it slowed down a little bit today on people sending me what we call the loan estimates. So if you're in the process of getting a mortgage, send me your loan estimate. And I'm going to review it. I think yesterday we had 11 of them, and I think we beat everybody out there that was on there. So hopefully we picked up 11 new customers yesterday because of that. I got about 4 today. I think we picked up all of those as well. What I'm asking you to do is if you're in the mortgage process right now, send me what's called your loan estimate. It goes over the rate and the fees and everything. I'm almost positive I can beat what you're getting. So email it to me at Danny. I'm changing that because all my friends are making fun of me. It's Danny, DANNY .frio, which is FRIO at preferredrate.com. Okay? So email that to me. Or your mortgage statement. If you're looking, you're saying, you know what, I'm teetering on the fact, does it make sense to refinance? Send me your mortgage statement and let me know a couple things. I'll probably email you back saying, any idea what your credit score is? How much is your home worth? I'll ask you a few questions, then I'll dissect it down and say, okay, here's exactly what I can do for you. So reach out to me there. I'll give you some more information at the end. So basically they're saying, okay, the Federal Reserve jumped in. We don't really think that's going to do anything. What it might do is it might spur inflation. And then things 6 months, a year, 18 months down the road, some things start to spiral. And then the Fed has to jump in and make drastic bumps up. And that's going to play even more havoc on what we're going through. So let's go to the end of the day. We're going through the wrap-up. So I'll go through the wrap-up with you right here. Dow's down almost 800 points. Again, yesterday was 1,200 up. The Federal Reserve came in with a 50 basis point emergency cut. You're going to see here where other analysts agree with me on this. The federal cut is an attempt to help the economy and stock markets due to the virus. It had the opposite effect. Why? It shows the Fed has no clue on what to do. Cutting rates, and I think it says right through here, isn't going to spur. Here it is. People won't go to dinner, movies, etc. Because their credit card rate just went down. What it affects is, let me go to that in a quick. What is the federal funds rate? Well, basically, at the end of the day, banks, the Federal Reserve banks, have to have enough in their reserve balance. It's like your checking account. Okay, if you need to have at the end of the day, you need to have $1 in your account to keep it active. Let's say you don't, so you go to overdraft. That's basically the federal funds rate. So you go to another federal chartered bank and you borrow money from them at most likely this rate. So what this kind of has a ripple effect to is a lot of short-term or consumer debt. Home equity loans, car loans, credit cards, things like that. It has nothing, absolutely nothing to do with fixed rate mortgages. Nothing at all. So I get a lot of calls, and I'll get a lot of calls tonight and tomorrow saying, Dan, the Federal Reserve just reduced rates, 0.5%. So my rate now, it was going to be 3.5. It's 3 now, right? No, No, it has nothing to do with mortgage rates. Um, so when you change one rate here, it sometimes has a ripple effect throughout some different things. But basically what they do here is they try to put this in place to say, okay, we're going to ease a lot of the credit so the banks can now lend more to you, make it easier, spur activity, and grow the economy. Hopefully that makes sense. That's Econ 101 for federal funds rate. So it's basically bank lending between banks. Okay? That's it. That's it. Period. It usually has an effect on the stock market. It could be good. It could be bad. It usually has an effect on mortgage rates. It could be good. It could be bad. It would have been fantastic today if we already didn't have this run in the market. So let's see what where mortgage-backed securities went, and I'll explain to those newbies what this is. What we follow here is the mortgage-backed securities market. This is a bond that trades, that determines or dictates mortgage rates. So it's an investment vehicle that creates mortgage rates. Okay, this is the price. So the more you pay for the bond, the less yield you're going to get. I got a cold, but I don't have the coronavirus. I just got a head cold. So here's what happened in the market. We had a huge, I'm going to condense this a little bit. Let's see if I can go to this and even make it a little bit tighter. Look at this run. This is more dramatic than it even looks on here. This is a phenomenal run in the market. Then we had a little easing, and now we had a huge spike. Basically, it's at the point now where banks are saying, you know what, this thing can go to whatever. We're really not going to change anything on our side. And I've seen that one other time in my lifetime, where rates kind of hit a spot and just stopped. They didn't move anymore. Again, in a normal market, this bigger move would have really moved rates. But we've moved so far down that there's really not much more room to move. So again, when you hear all this, and I love the marketing, every channel you turn on and every, website you go to, you're going to see mortgage rates the lowest ever in history. Yeah, but they're not much lower than they were a day ago or even Friday. So I locked in a lot of people because I don't think we're going to get much more easing in rates. And I want to lock in because as soon as some good news comes, we could be right back down to, here's the averages that we follow. We could be all the way back down to here. You're talking about probably a 0.5% jump in rates. And it's going to happen. I can't tell you when, but when the things turn, it's going to move fast. So I want my borrowers to be protected. If we have the chance of the rate getting 1.1% better or 0.5% worse, I'm not willing to take that gamble. So that's why I locked in a lot of people today. Again, you're going to see this euphoria. The Fed rate cut has nothing to do with mortgage rates. It just doesn't. So I can't stress that enough to you. If you're in the process now, I highly suggest you get in contact with me. Let's review what you have. I had 2 clients actually call me saying, Dan, do you think this is the bottom? I don't know, but it is so far down there that there's not much more room to go. So I only think it's stagnant or up from here. So I'm locking in. I would highly advise you locking in. And again, if I'm wrong, you might miss out on a 0.1 or 0.2 reduction. But conversely, there's probably a better chance of the rates even going maybe up a whole percent. They're down 1.5% since last year at this time. 1.5% lower than last year at this time. So even if you bought a house last year, call me. You're not that far into the game. Let's refine you. Save you $200-300 a month. Start prepaying those payments every month. Paying an extra. If you're saving $250-300 a month, send in an extra $150 on your mortgage. Save you under $150. You're going to pay off your house even that much quicker. So that's what I'd highly suggest you do. So let me tell you a little bit about me. What I do. My name is Dan Frio, the Mortgage Update. I have a 2 radio shows in the Chicagoland area. I've been doing mortgages for 32 years now. I can do, I think now 48 states that we have in the country. So I'm almost everywhere now. The best way to reach me is just, again, email me at Danny, D-A-N-N-Y, .frio, Frio is F-R-I-O, at preferredrate.com. Look me up on Google. Just Google The Mortgage Update with Dan Frio. You'll find me all over the place. But if you're in Chicagoland area, tune in weekdays from 7:30 to 8 p.m. I'm on WYLL Christian Radio. I have a show every night. And then I'm on WIND. It's one of the largest talk radio stations in Chicago. I have a show on there at 7 to 8 a.m. on Saturdays. All of that data I post on YouTube. So if you ever go to my YouTube channel and you see a little grid to the side and then it has some green, looks like green charts in that, that's my shows. If you want to check out the website that has all the shows podcasted, go to, I know I'm throwing a lot at you, but go to themortgageupdate.net. So themortgageupdate.net. Or give me a call, 844-775-LOAN. That's 844-775-5626. Again, my name is Dan Free. I do the Mortgage Update. Recap of the day. Huge move in the mortgage-backed securities market. Really no change in mortgage rates. The Dow crashed down almost 800 points. The Federal Reserve came out and cut the the federal funds rate 50 basis points, so 0.5%. And what that does and what that affects basically is short-term investments, car loans, credit cards, home equity loans. And basically what it is borrowing between a bank and another bank to make sure they have enough in reserves at the end of the day. So it doesn't have anything to do with mortgages. So I hope you find this channel educational. Please give me a thumbs up. What I'm going to ask you to do, please start sharing my videos so I can help more and more and more people. I'd greatly appreciate it. Leave a comment down below. I answer every comment. I'm starting to get a lot of spam because of the content. I'm getting more and more views and subscribers, so I'm getting a lot of spam. So if I miss your comment, I truly apologize. I'm trying not to, but I'm trying to respond back to everybody. If there's a video you want to see or want me to dig in, please mention that down below. But again, if you're in the process of a mortgage, please reach out to me. I'd love to help. The worst case scenario, whatever quote you have is better than mine. God bless you. Take it. So thanks again for watching. Take care. See you tomorrow, same time, same place. See ya.